In this Microsoft stock valuation, I like to say that bundling leads to dominance. My name is Andrew Stotz, and I want to welcome you to this valuation masterclass case study. So let's go to the company's background. As of August of 2024, Microsoft is the third largest company in the world by market cap. And if we went back a couple months, it was number one. So Bill Gates and Paul Allen founded Microsoft in 1975 and revolutionized early computing with the DOS and later Windows operating system. Windows has over 72% of the market share. That's incredible for the number of computers that are out there in the world. If you've ever used a computer, you've used Microsoft products. There's three distinct segments of the business: the productivity and business processes segment, intelligent cloud, and more personal computing segment. And they all add up to about $212 billion in revenue. So the more personal computing area is shrinking. Basically, the revenue of this area accounts for about 26% of total revenue, and it is counting for only about 19% of total gross profit. On average, the company's earning about a 42% gross profit margin compared to an average gross profit margin in the world of about 30%. Impressive. But that very low 30% margin is happening in the more personal computer segment. Now, 2023 revenue was US dominated. Basically, 50% of the revenue came from the United States and the rest from around the world. And more than 70% of 2003 revenue comes from the top three products. That's Azure, which accounts for about $80 billion in revenue and about 38% of total revenue. Microsoft Office, which accounts for $49 billion in revenue, which is 23% of the total. And then Windows, which accounts for about $22 billion or 10% of the total. Now, there's three other categories. Gaming, that accounts for 7%. LinkedIn generates $15 billion. And then Bing is search and news advertising. That's about 6% of revenue. Now, I wanted to go to a Microsoft timeline in the early days because my life kind of parallels that company. In 1980-81, they launched Microsoft DOS for IBM PC. In 1983, I graduated from high school in Ohio. Microsoft released Word for MS-DOS, and Lotus 1-2-3 was launched and became the #1 spreadsheet. It wasn't launched by Microsoft. In 1985, they launched Windows 1.0 and Excel for Macintosh. Most people don't know that Excel was originally launched for Macintosh, and that was the year in 1985 that Steve Jobs was pushed out of Apple. Microsoft did their IPO in 1986, and of course made many people millionaires, including Bill Gates. In 1987, they released Excel for Windows and Windows 2.0 with improved graphics. Now, in 1988, I bought a secondhand IBM computer for about $750 using my credit card. I was in my final year of university, and I learned how to use Lotus 1-2-3 before there was Excel. Now, in 1989, Lotus 1-2-3 was released, but Excel began catching up. And then Microsoft started to initiate the bundling in Microsoft Office of Word, Excel, and PowerPoint. That was a knockout blow in 1989. I graduated from Cal State Long Beach and stood out at Pepsi by making charts with Lotus 1-2-3 when I went to work. In 1990, Windows 3.0 was a major success, selling over 10 million copies, and Windows NT was launched as a secure, stable OS or operating system for businesses. In fact, this is a picture of me in 1993. I started as a stock market analyst in Thailand using Excel on a very, very slow PC. In 1995, IBM acquired Lotus 1-2-3, but it was already in decline and it was beaten and destroyed by Excel. In 1997, Steve Jobs returned to Apple, and at that time, Microsoft invested $150 million in non-voting Apple stock, helping Apple regain stability, and that's when they were committing to making Office for the Mac and the like. And then the Asian financial crisis struck when I was in Bangkok. Let's look at the company's competitive strategy. The company was founded in 1975. It's in the infotech sector. It's got about 221,000 employees and about $212 billion in revenue. Its main segments are Azure, Microsoft 365, and Windows. And its competitive advantages comes through ecosystem integration, continuous innovation, and market dominance. How was it achieved? Well, by tightly interlocking its products or bundling, maintaining high switching costs, heavy investment in technologies, and building strong ties with corporate clients. Now, under CEO Satya Nadella, Microsoft has excelled in cloud computing and AI. Satya replaced Steve Ballmer as the third CEO of Microsoft in 2014. He shifted the company away from a failing mobile strategy and focused on cloud computing and AI segments. Now, Microsoft has invested about $13 billion in OpenAI for further partnerships. With a recent valuation of nearly $80 billion, OpenAI has become one of the most valuable tech startups in the world. Structured as a minority economic interest to gain profits but not control to avoid regulatory scrutiny. Now, with this partnership, Microsoft is integrating technology powered by ChatGPT into Bing, GitHub, coding tools, Microsoft 365, and Azure Cloud. Let's look at the top 10 acquisitions by deal value. Microsoft keeps looking for new products to bring into its ecosystem, specifically products that I would argue can be bundled. Some of the smaller ones like Nokia, which was $7 billion, and Skype, which was $9 billion as an example. But it really gets big with Activision Blizzard, which is $69 billion, and LinkedIn, which they bought a while ago at $26 billion. Activision Blizzard is almost equal to the next 5 acquisitions combined. Now, most of them happened after Nadella started the role as CEO. Now, Microsoft launched Teams in 2016 to compete with Slack. Many argue that Slack is the better product of the two, but it took Microsoft less than 2 years to beat back Slack in terms of daily active users. Microsoft Teams saw exponential growth in users, while Slack has seen linear growth. So the point is Microsoft has the ability to scale up faster than anybody. Microsoft could leverage its expertise and customer base within enterprise solutions. In fact, what we can see is Microsoft Teams has 320 million monthly active users now. And by bundling Teams with Office 365, users basically are getting Teams for free. And it's hard to beat free. From Microsoft's perspective, they're adding much more value into their Office 365 product, which allows them to keep prices high or even raise them. Microsoft also understands they're selling to the end buyer, not the end user. Now, Microsoft tries to do the same to other apps also, like Microsoft Tasks, which tries to overtake Trello, Microsoft Lists, which is trying to overtake Monday.com, and Microsoft To Do, which tries to overtake every personal task management app. By bundling and leveraging its enterprise clients, Microsoft has a good chance to become the dominant app in terms of users. And it's currently integrating Copilot AI into its ecosystem. Does the strategy lead to a competitive advantage? I use my world-class benchmarking scorecard to measure if a company has a competitive advantage. I developed this scorecard 10 years ago, and here's how we construct it. First thing that we do is my team gathers the yearly and quarterly financial data of about 26,000 companies worldwide, and then we calculate each company's profitable growth score, which is a composite measure of both profitability and growth. After that, we rank the company relative to sector peers of a similar size. A decile ranking of 1 or 2 is financially world-class, while 10 is worse. And we assess the company's performance over the prior 4 years and the past 12 months. So is Microsoft financially world-class? When we compare the company against 640 large infotech companies worldwide, it is extremely profitable, and it is world-class in its profitable growth score. It's a 1 all the way across. So what does the valuation look like? I use my FVMR methodology to determine the attractiveness of the company. I start with F, fundamentals. Let's look at net profit margin and return on assets. And then I look at V, valuation. Let's look at PE and price to book. And then I look at momentum, in this case, earnings momentum, EPS growth, and price momentum, just the percentage change in price. Then I look at R, which is risk, and I looked at net debt to equity, and beta, which is price risk. So let's look at what my simplified or abbreviated FVMR scorecard shows. What it shows is Microsoft having a rating of 5 out of 11 companies that are above $100 million in the infotech software services. There are a couple of other companies that look even more attractive like IBM. But for Microsoft, it's pretty incredible. You're getting a 36% net profit margin, which is incredible. You're buying that at a PE of about 35 times. They've got momentum in their earnings, and we can see that they don't have any debt. Now, click the link in the description to download this PDF and get the abbreviated FVMR scorecard for the world's top 500 companies. So let me wrap up by asking the question, for Microsoft stock, does bundling lead to dominance? That's my question. What do you think? I look forward to hearing your comments in the comment section.